I'm Emily Chang in San Francisco, and this is Bloomberg Technology. Coming up in the next hour, Amazon beats estimates across the board, encouraging investors the company's pandemic momentum isn't waning as vaccines roll out and the world reopens. Shares surging after hours. Plus, Qualcomm revenue popped more than 50% on smartphone demand. But what about the company's expansion into other products like PCs and cars? I'll ask CEO-elect Cristiano Amon about that, the chip shortage, and more. And speaking of cars, we'll talk the way forward with Waymo. Co-CEOs for Alphabet's self-driving technology company joining me on fresh capital injections and autonomous driving's road to reality. All those stories in a moment, but first, big tech keeping us busy. Amazon and Twitter earnings out after the bell. Twitter tumbling after hours. More on that and U.S. stocks across the board, which rose to a record Thursday. Our Kriti Gupta and Ed Ludlow have the latest. Kriti, let's start with you.
Well, green on the screen when it comes to those major averages. Let's just take a look at this. The S&P 500 higher by 0.7%, and a lot of that was thanks to those big tech names. And even though they did lead the S&P 500 higher and the Nasdaq higher, tech broadly underperformed. You can really see that kind of a diversion in the New York FANG index, housing those big tech heavyweights versus the Nasdaq broadly. Flip up the boards, and I want to go overseas and show you that that is not the case abroad. If you look at the Nasdaq Golden Dragon Index on a 3-month time frame, you can really see that even though tech is kind of trading sideways here, maybe making some marginal gains, not monumental. You're seeing monumental losses here in this index. And of course, this is the one that houses the likes of JD.com, Baidu, Alibaba. So really that tech story, that tech pain story, a very big narrative in China right now. Let's come back stateside, though. Flip up the boards one more time, and I want to talk about semiconductors because, Emily, you talked about that shortage in your intro right there. Really important to note that was part of the dynamic. You saw some warnings from Caterpillar, Apple as well this week about how it could really hurt some of their business in the downside. That actually helps semiconductor stocks because that demand story isn't going away. On the other side, you are seeing some pain in the Nasdaq Biotech Index, a lot of that in line with healthcare lagging. And lastly, Bitcoin flat on the day. You saw green on the screen, risk assets higher, but that risk sentiment proxy not doing so well. Ed, what are you looking at?
Yeah, it's a tale of two tech companies, a tale of two very different forecasts. Amazon up almost 3.5% in after-hours trading, beating across the board, bullish outlook for the current quarter. Twitter plummeting almost 10%. Beating or meeting estimates, but the forecast for the current quarter, not great. Flip up the boards and let's focus on Amazon. Amazon's strength in e-commerce, strength in AWS, but the outlook of $110 to $116 billion of sales in the second quarter shows they have longevity even as the pandemic eases. Come with me into my Bloomberg and look at this chart. This is the chart. This is the 24th consecutive quarter of sales growth above 15% for Amazon. 24 consecutive quarters. And this time round, it's not just e-commerce, it's strength in cloud and profitable advertising revenue as well. The company is really solidifying its place in the post-pandemic world, latching onto consumers. Come back to me in the studio and let's think about Twitter. It met estimates in terms of financials and also active users in the quarter, but it didn't feel the same love that the likes of Facebook and Google got. We know that the advertising market is strong. Prices are up and volumes are high, but Twitter is not feeling the same love. It gave a tepid forecast for the second quarter, a range of revenue from 980 million through to 1.08 billion, but the street is looking at the high end of that. So what is the concern here? Why is Twitter not resonating with advertisers in the same way that Facebook is, that Google is? We'll find out during the earnings call. Emily.
All right, Ed, Kriti, thanks so much. Sticking with Amazon now, want to take a deeper dive, bring in PackView co-founder and longtime Amazon veteran, Melissa Burdick. Melissa, obviously huge numbers from Amazon yet again, lots of pandemic momentum, but I wonder, is this the last quarter they won't have to, that they'll have that sort of pandemic boost? And the big question is, what happens in the next quarter?
Yeah, this is definitely maybe, I don't know if it's the last golden quarter, but they're going to start comping last year's insane growth. Starting Q2. And so that's going to get a lot harder. But interesting, a very fine line item in this report. They mentioned that Prime Day is going to be pulled into Q2 this year. And so, that's an interesting data point that I kind of feel like Amazon is able to use Prime Day like a pawn. They're able to pull forward a demand into quarter 2 to help them with those comps to last year, similar to what they did last
That's
year.
interesting.
Yeah.
That's interesting, moving Prime Day to the last week of June. Do you think they need Prime Day to meet those numbers?
Yes, absolutely. Because they, during the pandemic last year, they're looking at comps year over year. And the only way that they're going to be able to drive that much demand is to move that event like they did last year for Q4. The Prime Day is usually in the middle of the summer. It's usually a dead month. So that's why they kind of created the event in the first place, to commemorate 20 years of Amazon. Last year, if you remember, they moved Prime Day from July to October as a way to move forward demand into the quarter. So they kind of, as I was saying, they're kind of using Prime Day to drive this demand generation for them, which is pretty impressive.
Could advertising pick up some of that slack? Because Amazon has been getting an increasing share of the retail ad pie, despite Google's best efforts. And I wonder if that's part of a longer term solution.
Well, interesting that you mentioned advertising, because let's talk about that for 1 second. This quarter, the advertising growth was 73%, their biggest quarter yet. Our data showed a 60% year over year increase. So that to me means that a ton of new advertisers came into advertising on Amazon, which is tremendous. And to your point, Amazon advertising business is increasing. We just took a 10% share of the digital market, while we see Google kind of declining. And with Prime Day, we saw this last year for October as well. People come in and advertise for Prime Day, advertising revenue increases. So that advertising revenue will also increase along with Prime Day too.
Meantime, later this year, we're expecting Andy Jassy to take over as CEO of Amazon as Jeff Bezos moves firmly into the chair role. This as Amazon is doing increasingly unexpected things, designing its own chips, launching a hair salon in the UK. What do you think is the next generation of Amazon? I mean, it's almost as if there's nothing the company won't try to do.
I mean, they are a great juggernaut of test and learn. They're getting into everything. The hair salon is really interesting. I actually launched the beauty category on Amazon, and I don't think that has anything to do with actual hair salons. I think that has way more to do with getting into distribution of professional hair brands, which in that industry you have to have a physical salon to be able to do. And that's always been a challenge for Amazon. They're also building out technology so that you can see the hair color or the cut. That would be amazing technology that other salons can license. So they definitely have a lot of opportunity to continue to grow. So we'll see what that is.
Right, and certainly we'll see if that's a bet that starts to expand, and of course be watching how Andy Jassy chooses to lead the company when he takes over. Melissa Burdick of PacView, who worked at Amazon for many, many years. Thank you so much. Always good to have your input on Amazon on the show. All right, coming up, some breathing room amidst the chip crunch. Qualcomm's incoming CEO Cristiano Amon says the world's biggest supplier of smartphone chips managed to avoid the worst of the supply shortage as it reports a dazzling second quarter. He'll join me next. This is Bloomberg. Qualcomm posting strong second quarter results Wednesday. The mobile tech giant managing to dodge the worst of the chip supply shortage while riding a wave of smartphone demand. The results blowing away Wall Street estimates. Not a bad parting gift from CEO Steve Mollenkopf, who hosted his last earnings call. He is handing the reins over to Cristiano Amon beginning July 1st, and Cristiano joins me now live from San Diego. Cristiano, great to have you back here on the show. So strong quarter, stronger outlook than was expected. What has changed that's allowed you to be so positive?
Well, there are a number of things. On the smartphone market, We have a great opportunity ahead of us, which is the expansion of our addressable market into the units that were with Huawei and high silicon, and and the ability to gain that market share, especially in the premium high tier unit, in the market like the smartphone, which is mature. It's an incredible, I think, driver for a business now into the future. You don't have that often that you have $10 billion of addressable market becoming available all of a sudden in a mature market. That's one. The other one is we continue to diversify the company, and we have an incredible story in automotive and IoT segment, and 2 consecutive quarters of $1 billion in IoT, and now guiding 1.3 billion for next quarter. That is the reason we're so excited about the company.
Staying on smartphones for a moment, as you say, it is a mature market. So what is your strategy, aside from Huawei, to continue to grow in the smartphone market?
Okay. In 5G, it's becoming crystal clear to us that the strategy, which is really working well for the company, is to basically provide the premium and high tier Android experience with Snapdragon and attaching our RF front end. And we have got ourselves in a situation now that really, when you think about premium Android, the word that comes, it's Snapdragon. It's powered by Snapdragon. We're highly differentiated there. And we already know who the winners and losers are of the Huawei volume. The most of it went to companies like Vivo, Oppo, Xiaomi, including Honor. And that put Qualcomm in a very good position. So that is really being the key driver on the strategy. We are seeing the 1.5 multiplier we talk about, in the beginning of 5G, from 4G to 5G, we see 1.5 times the revenue because of our chipset and our RF front end. And we're just the beginning of that. As outlined in the earnings call, we have 2022 as the ability to really realize the opportunity of 10 billion in addressable market available to us.
Now, we've heard everyone all the way to Elon Musk complaining about the chip shortage. Just how bad is it? And when do you expect some relief?
Okay. Emily, we across the board, as phones and auto and IoT and everything across the board, there's really more demand for our products than we can supply. And, in one hand, it's a good position to be in. It shows that there's a lot of demand for technology. But we have utilized our scale and put a lot of actions in place to get out of this capacity crunch. We have the unique ability to multi-source products, even if they are at the leading semiconductor technology node. We have ability to leverage multi-sourcing. We also put a lot of capacity planning in place, and we have the scale to make capacity demand commitments and get the capacity in return. And that's why even in the middle of this very difficult supply chain situation, we continue to generate growth, have a very good guide, and we have line of sight of material improvements in supply for us towards the end of the calendar year.
So what exactly does that mean? At the end of the calendar year, what do you expect to happen?
I expect to see our ability to substantially meet the demand, be much less constrained, and position us very well for all of the growth vectors we have for fiscal 22.
Now, yesterday was Steve's last earnings call. You have said your tenure will be defined by Qualcomm's expansion outside of smartphones. You mentioned cars, you mentioned IoT, of course, PCs. Give us a progress report on that push.
Look, we have a lot of reasons to celebrate, really. Automotive, I'll start with that. On automotive, the car is changing dramatically. And if you look at a lot of the car companies, they need a lot of digital assets. They talk about the digital chassis as being one of the most important assets for them. And we are position ourselves as the partner of choice for all those companies. You can even think about you have a traditional car company, you add the technology of Qualcomm, that could be equal to what a company like Tesla can do. And we see that reflected in our numbers. We we added another billion, and our pipeline of automotive revenues is now in excess of 9 billion, including a number of technologies that are required by this digital chassis. In the new segment, I think we're talking about it, and we have a lot of growth opportunities because it's highly diversified, is our IoT segment. And within that segment, there are a few things worth highlighting. They could be very big bets for us. One is the conversions of computers and phones. The computer became a communicator device. I'm sure when you go to your computer right now, number one use case is doing Zoom, calls, and it's really changed the use case into a computer more to what a phone looks like. It's connected, it has cameras, it has multimedia. And with the acquisition of Nuvia, we expected that we're going to be a very good provider of what the future of PCs look like. And the other big bet, it's augmented reality. We're just in the beginning of that. I think we have great progress with companies like Facebook for Oculus, Microsoft for the enterprise with HoloLens, and it could be the next phone. So we are excited about the IoT segment, and we'll keep going at it.
Interesting. Now, so many changes happening in the chip business right now. You told me you are very excited about Intel's new foundry operation, looking forward to becoming a customer. There's still a lot of folks who are skeptical that companies like Apple and Amazon, who are now designing their own chips, will go to Intel rather than sticking with a neutral party like TSMC. Do you see a real changing of the guard coming or not?
Look, from a big picture standpoint, we're super happy to see more investment in foundry. Look, we represent one of the biggest examples of this very vibrant United States fabulous semiconductor industry. We need semiconductor manufacturing, and Intel to become a foundry is really welcome news. We are committed to work, not only with our existing foundry partners like at TSMC and Samsung, but also with Intel. It will take time. I believe those conversations, we're really talking in a number of years, but we see that as a positive development for sure.
So who gets left behind then, if someone does?
Look, the way I'll answer that question, right? More and more, I see, the intent to develop manufacturing in multiple locations. You see Samsung, one of the probably best kept secrets, and nobody talks about it. A large number of our chips are made in the United States with a Samsung fab in Austin, Texas. TSMC is talking about more investment in the United States. Here's how we feel about this. There's always going to be a room for leading technology semiconductor, and it's all about having the best performance. We today work with companies like TSMC and Samsung because they're leader in performance. If Intel takes that position, it's all about technology. It's a great opportunity for Intel as well. It's just about executing and trying to achieve leadership.
All right, good stuff. Cristiano Amon, Qualcomm CEO-elect. We'll be looking forward to your officially taking the reins later this year. Thanks so much, Cristiano, as always, for joining us. Coming up, Twitter after hours, shares tumbling. Even though the company posted results largely in line with estimates, was growth just not explosive enough? We'll wade through the results next. This is Bloomberg. Twitter reported first quarter revenue up 28% to more than $1 billion, largely in line with analyst estimates. So why did it feel like a bummer to investors? The stock falling like a stone in after hours trading, down more than 10% at this moment. Kurt, ouch. What's happening there?
Yeah, I do think that there is just a comparison issue here when you look at what happened earlier in the week with Facebook and Google, which are the other obviously advertising-driven companies. They just both crushed the first quarter, and they did really well, and they far exceeded expectations. And then here comes Twitter, and they didn't really exceed anything. They were right in line, and then their Q2 guidance is a little weak. And so I think there was just this high expectation, having seen those other two come through earlier, that, the digital ad business was really booming. And I don't think Twitter necessarily capitalized on that.
Bloomberg's Kurt Wagner, who of course covers Twitter for us. Kurt, how much of this has to do with the lack of a Trump bump?
I don't actually think it's a Trump issue, because when you look at the user growth, it was still 20% for the quarter, which is good for them. It does not seem as though, they're really struggling to maintain that usage, which I think would have been a sign that maybe there was a Trump bump, right, if people had flocked away from the service. What I think this is more about just their business. I mean, they're really good at brand advertising. They get the kind of advertisers that you see on television and that want to associate themselves with big events. They're not really good with the small businesses that drive a lot of the commerce online these days. And certainly over the last 12 months with the pandemic, they're not really doing that direct response, that direct sales ad that Facebook and Google are really good at. And I think that's where Twitter's missing out here.
I'm going to be speaking with Twitter CFO Ned Siegel coming up on Friday, talking about these results. What do you think the questions are for the company right now?
Well, I think, in contrast to Facebook, and I'll use them because I listened to their call yesterday, they do a really good job of really always pointing to the future, right? Here are the things that we're working on. Here's AR, VR, shops, business messaging. Here are all the different ways that we're going to make money that we don't currently make money. And Twitter doesn't really have that, right? They do ads, and up until now, that's been about it. So I'd be interested to see if they really start to press this idea of subscriptions. They could do newsletters. They could do tipping. But I want to hear from them a little bit more about how they plan to diversify their ads business, because a lot of their competitors are doing that and talking about it very publicly, and Twitter just doesn't do that.
And quickly, Kurt, how much do you think that the competition from other platforms like TikTok or Snap or Instagram is playing a role here, or is that a totally different use case at this point?
Well, I do think those all play a role, because if you're an advertiser, you only have so much money to spend, and you have to pick and choose which of these platforms to go with. What I do think, though, is that Twitter could just be more competitive if they offered, again, those more specific direct ads for shopping and commerce in particular. I feel like that is the area that's really blown up in the digital ad space, and they just don't play there.
All right, Bloomberg's Kurt Wagner, thanks so much. Don't miss my interview with Twitter CFO Ned Siegel tomorrow. Coming up, a new era for Alphabet's Waymo self-driving car unit, with not just one, but two CEOs taking the reins. Anyone can now hail a Waymo self-driving car in Phoenix, but where will Waymo take us next? Co-CEOs Dmitry Dolgov and Takidra Mawakana joining us next. This is Bloomberg. Welcome back to Bloomberg Technology. I'm Emily Chang in San Francisco. Google reported strong earnings Wednesday, pushing shares higher, but there was one line in the report you might have missed. Bloomberg's Ed Ludlow here with that now. Ed, take it away.
Yeah, shares up 1.4% on Thursday, hitting fresh record highs, a strong earnings report in the core business, advertising, the cloud. But I always like to look to the other bets line, and the most notable being Waymo, the self-driving unit. Sundar Pichai, the CEO, did have kind words to say about Waymo. If we flip up the boards, two new CEOs. He talked about their progress in Phoenix, where they run a commercial pilot. He talked about the upping of their testing in San Francisco. But we didn't really hear much more about progress or the future or Google's commitment to the company. Or consolidation. Flip up the boards again. What we've seen over the last 12 months is consolidation among autonomous driving startups for financial reasons, for talent reasons, some big names. Amazon acquiring Zoox, Aurora buying Uber's self-driving unit. Just in the last week, Lyft selling its autonomous driving unit to a part of Toyota, a subsidiary of Toyota. There are lots of reasons behind that. It is capital intensive. Progress has been slow. There is a finite pool of engineering talent. But everyone wants to know one question. When are we going to see commercial robotaxi fleets, actual autonomous ride-hailing in the real world? Because we've been talking about this for some time, Emily.
All right, we're going to talk to some folks who have an answer to that question at this moment. Bloomberg's Ed Ludlow, thanks so much. Joining us now to talk about the future of Waymo and the industry are the new co-CEOs of the company, Dmitry Dolgov and Takidra Mawakana. Thank you both so much for joining us. I want to start by talking about your backgrounds because you have very different skill sets. Dmitry, you've been in the self-driving industry for 2 decades. Takidra, you started off as a lawyer, then worked your way through policy and operations jobs in tech. History tells us co-CEO scenarios don't often work. Takidra, why do you think it'll work this time?
Thanks so much, Emily. I think in this case, Waymo is a unique company, and we are tackling, as the segment just suggested, a very new industry with a nascent technology. And so having these complementary skill sets where technology is always going to be at the core of our operations, of our engagement with the policy landscape. And Dmitry and I now have the benefit of the last 4 years being deeply engaged on all of the strategic decisions, working side by side. So it's really set us up well to work together and to be in this position as co-CEOs.
Now, Dmitry, some people don't realize that you can go to Phoenix right now and hail a self-driving Waymo and it'll take you where you want to go. I know you're always testing these crazy scenarios on your test track in terms of where the technology goes next. You know, where does Waymo take us next? When will I be able to, buy a self-driving Waymo myself?
Well, Emily, we have, as you mentioned, deployed a fully autonomous ride-hailing service in Phoenix, and that's how people can experience our technology today. You can just download an app, call a car, it shows up with no human behind the wheel, it takes you anywhere. And that's the deployment that we're going to pursue first as in a ride-hailing business. And then we have plans to expand that core capability that we built of the Waymo driver to other commercial applications like trucking, deliveries, and eventually we will get to what we refer to as the personal car ownership.
So, Takidra, on that note, do you plan to sell services direct to consumer, and if so, when? Or is it going to be more like a package service to cities and municipalities?
Yes, we're definitely going direct to consumer. So as Dmitry just said, we have 2 sides to our business currently. We have Waymo One, which is where we move people, and we have Waymo Via, which is where we're moving goods. And so for Waymo One, our ride-hailing service that's available right now today in Phoenix is direct to consumer. You download the app, you hail a ride, you go from point A to point B. It's a rider-only experience. There is no driver in the car or behind the wheel at all. And that's really important because I think there's sort of a lack of understanding that that service is a service, it's commercialized, people are paying for it, and they're excited about it. On the Waymo Via side, we will have Class 8 trucks that are currently going between Tucson and Texas, as well as local delivery, where we've already entered into partnerships for B2B parcel and part transmission for AutoNation as well as UPS.
Now, you talked about a lot of things there, everything from robo-taxis to driverless vans to driverless trucking. And I wonder, Dmitry, why focus on all of those things at once and now? Why is that the best approach in your view?
Well, Emily, we spent years advancing the core capabilities of our technology and the core capabilities of the Waymo driver. We have now reached that level of maturity of that technology and that product that we have it deployed in that fully autonomous ride-hailing business in Phoenix. But looking at other product applications of our driver and other commercial lines, while there is some specialization when you go from ride-hailing to trucking to local deliveries, the core fundamentals of what it means to be a good driver carry over really well from one product to another. And the sensors, the software, and all of the AI and machine learning for understanding the world around you, for predicting the behavior of others, for making safe and natural driving decisions, as well as all of that machinery under the hood, the infrastructure, the simulation, the data science, all of that carries over really, really well. And that's what will allow us to move really fast in other commercial applications as well. So I'm confident in that technical foundation that we have developed over the years that will enable us to deploy the Waymo driver beyond ride hailing.
Now, I actually had a chance to ride it it was then Google, self-driving car 10 years ago, and I will never forget it. And certainly the technology has changed so much since then. As you mentioned, Takedra, Waymo's approach now is no driver at the wheel. You don't need the attention of a human driver, whereas other companies like Tesla, offer more driver-assisted technology. With Tesla fully self-driving beta, just around the corner, I'm curious if you're doubling down, if you would double down on that philosophy, and if you think that Tesla is going about it the wrong way.
Yeah, what we've learned with driver assist technologies is you really need to have a fully attentive human who has a driver's license and who is able to take over if the technology fails or needs human assistance. With Waymo, we're a fully autonomous technology company, and we're only focused on the level of autonomy needed for no human intervention. And we think that's really important for a few reasons. One, if you believe the NHTSA statistics around the amount of human error involved in the crashes today, 94%, then you know that that's actually how you tackle creating safer roads, which ultimately is our mission. Secondly, we also know that consumers are confused. Consumers need to understand the capabilities and limitations of the technology they're using. And so when you say you can get into a Waymo, the Waymo driver will do the driving task. You don't have to take over. In fact, in Phoenix, you're not even in the front row. So you don't need a driver's license. You can be someone old enough to drive who can't qualify for one. And we're excited about the mobility and access that this kind of technology would unleash for people who can't drive.
So on that note, since you say consumers are confused, there was just this deadly crash involving a Tesla. 2 people died in Texas. We are still getting more details, but Dimitri, as somebody who's been in this industry for a really long time, when you heard that story, what was your reaction?
Also, it's tragic because avoiding these kinds of tragedies is at the core of our mission. And we want to leverage this technology to improve the safety of transportation. That is why I and many other people at Waymo are here. So, it is tragic, and it causes us to double down on the work that we are doing on building our driver that is responsible for the entire task of driving, beginning to end, so that there is no confusion of who is in control.
Now, Takedra, I spoke with Ruth Porat earlier this week around earnings. We talked about your transition to becoming co-CEOs. She said you're both superb. From the outside, I know folks in the industry thought it was a little bit of an abrupt announcement. It came out on Good Friday. Can you tell us any more about the circumstances surrounding John Krafcik's departure and if this succession was planned?
Yeah, so John had over 4 decades in this industry. He really put his heart and soul into the automotive industry and at Waymo in improving road safety. And he just made a personal decision that he was ready to go and do something else in the short term, travel with his wife. And then he said, stay tuned for what else they may do. But he published a blog on that, and it was all in his own words. So this was really a decision that John made, and we're excited that he decided to stay on as an advisor. So we'll get to work with him in that capacity.
Meantime, there are continuing questions about how and when Waymo will make money. Silver Lake just led a big cash injection into Waymo, $3.25 billion. Dimitri, are we going to see more external funding rounds like this, or will the support come more directly from Alphabet?
Well, Emily, we did have a very significant round last year that included both Alphabet and external investors. And going forward, we are open to having the same sort of conversations with parties beyond Alphabet.
So, Takedra, how would you characterize the support of Alphabet at this point and the desire for Waymo to make money? And when do you see Waymo making money?
So the support from Alphabet has been tremendous. As Dimitri said, this is a hard challenge, building the Waymo driver to be fully autonomous and doing it safely and taking the iterative approach that we've decided to take. So we really emphasize sort of how do you roll this technology out the first time and get it right? And so that we have a lot of support for that approach. We believe that that's actually how you ultimately capture the value of all of the work over the past 11 years and over 20 million miles on public roads and 20 billion in simulation. It's by doing it in a way that preserves the opportunity in the long run. And so safety is the core of how we proceed, and we don't feel any pressure to divert from that approach.
As my colleague Ed pointed out earlier, Dimitri, we've seen a wave of consolidation in this business. And I'm curious, are we going to see Waymo make acquisitions as well? Is there anywhere in terms of technology or talent that you believe Waymo is lacking where you would like to bring that in?
Well, yeah, and it's first of all, it's very exciting to see all of this activity that's happening in the AV industry. But in terms of consolidation, as we just mentioned, building and deploying a fully autonomous system is a really, really hard problem. And it also has this property that is very easy to get started. And it's also very easy to get excited about the early progress you're making. But the more deeply you engage, the more deeply you understand the problem, the more you realize just how hard the task is. So given all that, it's not surprising that we saw a number of parallel efforts spring up, but now we're seeing, and we'll likely continue to see some more consolidation in the industry. And from the Waymo perspective, we have done some targeted acquisitions in the past, and then we will continue to keep an eye out for what's happening in the industry.
Now, Takidra, how aggressively is Waymo engaging with state government, local regulators to allow a wider deployment of fleets? Where will the next Phoenix be?
So Waymo's been engaging with state, local, and national government officials on how best to deploy this technology for years. And in Arizona, it was really exciting because Governor Ducey started out sort of enabling the technology path through an executive order. And this year, we saw the Arizona legislature pass a bill that actually codified that. And so I think there are a few states that are taking the lead. They're taking the lead because they have an interest in actually solving some of their own mobility challenges. They can look down the road and see that this technology would be useful for their use cases. And so we're deeply engaged at every level of government. And one of the things that's great is transportation innovation is a largely bipartisan issue. People recognize that this is an opportunity for the US to lead globally. And so it enjoys support on both sides of the aisle.
So, obviously I know the Chrysler Pacifica is one of your big vehicles, and having a large family myself, Dimitri, when will I be able to hail a Pacifica or, buy one myself and have it take my family to Tahoe? Give me a time, give me a number of years.
Well, as I mentioned, we have started the deployment of the Waymo driver in Phoenix. People who live there can already do that today. We are working on advancing the technology to scale up and take our ride-hailing business to more places and more people. And there's a lot of work happening towards that end. In particular, we are now switching to the 5th generation driver that is by far the most capable and the most advanced system that we have built to date. That's true, both on the hardware and the software side. And that system is designed to operate everywhere. It is built to work in harsh weather conditions like rain and snow. It is built to provide the capability of driving in dense urban environments. So that's the platform upon which we're going to go to scale. So I'm not ready to share any specific timelines, especially when it comes to Tahoe today, but that's what we're working on, and stay tuned.
All right. Well, I'll ask you again in our next interview. You can be sure of that. Waymo co-CEOs Dmitry Dolgov, Takidra Mo-Okana, thank you so much for joining us. Great to have you on the show, and wonderful to see a view of the present and the future. Thank you. All right. Coming up, electric car maker Rivian plans to roll out its all-electric pickup trucks over the next few years. But does the U.S. have a charging network big enough to support it? We're going to be talking about EV infrastructure in our City Lab next. This is Bloomberg. The EV boom is here to stay, and Rivian, an electric pickup truck maker, plans for its vehicles to hit the market over the next few years. As more and more EVs make their way to market, ensuring there are enough charging stations will be incredibly important. Bloomberg's Kyle Stock takes us through Rivian's charging plan.
The future of the auto industry, at least in the US, rides on pickups, specifically electric ones. Roughly a dozen all-new, all-electric pickup trucks will hit the market in the next few years, including versions from Ford, the Truck King, and Tesla. Right now, pickup trucks account for 1 in 4 of the industry's revenue dollars, and that share is only going to grow. But there's one big problem. Electric vehicles need electric vehicle chargers, and there still aren't many of those, particularly in rural America. Blame economics. Without big government subsidies like there are in China and Europe, it's tough to make money on charging without EVs. It's tough to sell EVs without charging. It's a chicken and egg problem, or as I like to say, an electric staring contest. Tesla saw this detente a decade ago and decided just to build its own charging network. This year, Rivian plotted the same course. Before even making a vehicle, the startup pledged to build more than 13,000 charging stations that it will own and operate. That's more than even Elon Musk has managed. What's as interesting as the why is the where. The Rivian charging map is scattered broadly. Campgrounds, trailheads, remote motels, they all loom large. Rivian fans will be able to juice up all over Alaska and Hawaii, in the deep south, and in the frigid forests of Maine. It's literally seeding vast swaths of EV desert. Chargers sell trucks, and Rivian wants to do just that, all over the place. It also wants to keep its customers happy. Like any hardware maker, Rivian is selling an experience as much as a product. The UX on a 5,000-pound pickup is as important as it is on a 10-ounce smartphone, maybe more so. A charger, one that works well and quickly, is a critical part of that UX. The charging network Rivian's building will be an astronomical cost, a huge risk to a fledgling company. Outsourcing the experience, however, may have been riskier still. This is how we move. I'm Kyle Stock. For more content like this, follow us on your favorite platforms.
Kyle Stock there, Bloomberg News. All right, still ahead, we're going to take another peek at Amazon's first quarter results, beating estimates on all fronts. That's next. This is Bloomberg. Amazon reporting a big jump in sales and a bullish forecast, continuing a streak of rapid growth even as vaccines roll out, raising the prospect of a return to pre-pandemic shopping habits in the United States. Joining us now, recap of the results, Bloomberg's Brad Stone, who covers Amazon for us and has been covering Amazon for a really long time. So look, the big question, Brad, is can Amazon keep up this momentum even out of a pandemic? What are you seeing in these numbers in terms of the company that Andy Jassy, who will be the next CEO, is inheriting?
Right, and in fact, folks asked about that on the earnings call. When will Andy Jassy be taking over? When will Jeff Bezos be stepping aside? They didn't have any more information about that. We still think that's going to happen in the third quarter, so sometime this summer. But listen, Emily, to me, what's remarkable about this kind of blockbuster earnings report is how sustainable the advantages that Amazon is building could be. So atop from the revenue beat and the operating income beat, they're spending $50 billion just on CapEx in the quarter. That's building fulfillment centers and delivery stations. They're in a position now to control their entire supply chain. And when you think about that, that translates into more convenience for customers, knowing when your packages are going to show up, lower prices. I mean, these are things that even though people might feel more comfortable going back into the stores after the pandemic, they're still going to make a difference. And people have been forging these online shopping habits during the pandemic. So to me, Jeff Bezos is handing Andy Jassy a very successful company that is firing on all cylinders.
Right, but the question is when. I mean, they made the point to announce this earlier this year. Why not give us a date? Why are they being vague about when that happens?
No, I don't know. They said the third quarter. I expect that this is already a leadership transition process that's already taking place, and that they have a new CEO for AWS, Adam Selipsky, and I imagine that maybe Andy Jassy's back in his own shadow role and following Jeff Bezos around and getting comfortable with running the whole company.
All right. Well, you would know better than almost anyone. Bloomberg's Brad Stone, thank you so much for that insight there. We'll continue to watch the Amazon headlines as they roll out. And that does it for this edition of Bloomberg Technology. Reminder, I'm going to be speaking with Twitter CFO Ned Siegel tomorrow after the company's first quarter earnings. Do not miss it right here on Bloomberg Television. I'm Emily Chang in San Francisco. Thanks for joining us. This is Bloomberg.